We know about the royalty and streaming model for minors, but how can the same business model be applied to music? This is an industry that we don't often think about when it comes to making money from. But here, joining us today are two very special guests who are going to be exploring this topic with us in great detail. Conor Gallagher and Ron Altbach. Conor is the founder, co-founder, and head of investor relations at Music Royalties, a company that specializes in financial interest in the top music brands all over the world. Ron Altbach is a legendary music producer and musician. He was the co-founder of the 70s French-American rock band King Harvest, famously known for Dancing in the Moonlight, which at one point reached number 13 on the Billboard's 100. So Ron, Conor, great honor to have both of you here today to talk about music. One of my personal passions. I don't do it professionally, but I am a passionate amateur musician offline. So thank you both for being here.
Thank you.
Great pleasure to be here. Yeah.
Ron, let's start with you, and then we'll get into the business side with Conor. Ron, you have worked in the music industry for decades. You've worked with some of the, King Harvest was at a time, it was beyond a little bit before my time, but it was a legend during the 70s and 80s, and you've worked with some of the top names as a producer as well. Tell us about your experiences as a producer in the music industry. Obviously, the music industry has greatly evolved from the vinyl days to now we stream on Napster and Spotify. Tell us a little bit about your background and how you came to be an investor and producer, and now you're involved with Music Royalties.
Sure. Well, I went to France in the late '60s to study music. I decided that I, in fact, was not going to be a doctor, so all my pre-med training was worthless. And I went to France. My friends came over from Cornell, and we formed King Harvest, and it was like being in the Wild West. There weren't that many Americans around in terms of musicians. We had a kind of a clean slate. We could play all the clubs, and then we started making records, and that was the first recording I ever did, and I have to say it was terribly unsophisticated. We do like an album in 3 hours. We go into the studio, and the producer said, "You guys got any songs?" And we said, "Sure, we got some songs." We'd record the songs, one take, and he'd pay us, and we'd go pay our rent and buy some food and probably some other stuff that we don't talk about on TV. And then so it was interesting that Dancing in the Moonlight is a wonderful song, and I'd love to spend time talking about the song. I don't think that's what you want me to do, but the writer of the song was a friend in college, and his brother came over to visit in France. That he was a drummer, also no longer living, and he brought us the song. We started playing it in clubs and in concerts, and people liked it right away. I mean, it was clearly a great tune. And so the producer said, "Yeah, let's record it." So we went to this little studio. The room that we recorded Dancing in the Moonlight, it was just barely big enough to put drums, electric piano, the bass player and the guitar player. The singer, also someone who's no longer alive, unfortunately, my good friend Dave Robinson, he had to stand out in the stairwell because there was no echo chamber first of all, there was no room for him, and he had a big voice. And second of all, there was no echo chamber. So he literally stood in the stairwell, and we had to keep doing different takes because if somebody opened the door to bring their groceries up, we had to start again. But so you're talking about really, I mean, in terms of the change of the business, really unsophisticated. We recorded on an 8-track. I think we did do some overdubbing, but very little. It was you read about the Beatles in the early days with a 4-track, and then we came back to America. We didn't have another hit. I have to say that unfortunately, I thought we were a pretty good band, but we didn't have another hit. And then I opted to join the Beach Boys in the summer of 1974, and it was a great experience actually. I went from playing in clubs, where there'd be like 100 people a night, to touring in private jets and playing for 100,000 people a night.
Right.
And then in the summer in 1977, I was asked to help produce records with the Beach Boys. So we produced. The Beach Boys weren't getting along. I guess they never got along, but they certainly weren't getting along, and they fought about everything. And so I was able to slip in and become the producer with one of the guys, Al Jardine, of a record for a movie called Almost Summer. and it was a fabulous experience. I mean, it was the big time. It was real studios, you know, walking into Hollywood, places where huge hits had been recorded, and it's addicting actually. So we did that album. I co-produced the MIU album, which is a kind of controversial Beach Boy album. The people who like Mike Love like the album. The people who like the Wilson brothers and don't like Mike Love don't like the album. But for me, again, it was a great experience, and we included my own songs on the album, and so I really got to feel that between the success of Dancing in the Moonlight and the experience of working with the Beach Boys, that I could actually start on the other side of the business, which was the record business side. Yeah. And at that time, artists got royalties. They got royalties of maybe 7 or 8. I forget, maybe 8 or 9%, 7 or 8%. In the old days, in the beginning days, in the Beach Boys, when they first signed, probably got a 3% royalty. So they made very little from record sales. By the end of the 70s, that number had gone up a little bit, and the performers on those records were the ones who were making the money. The publishers, the writers were making a penny a song, basically, a penny a song, and that hadn't changed for years, and it didn't change for years. What happened over the next 40 years, as you said, Napster being the kind of the turning point, was suddenly people stopped buying records because they didn't have to anymore. They could stream music, they could download music, and that all of a sudden that source of revenue from the sale of records just dried up. Now, until Connor can tell you the statistic, but I think until about 20 years ago or 15 years ago, artists, meaning the guys who actually made the record, played on the record, didn't get paid for performances. So a song is used in a movie, and generally the publisher got some money and the songwriter got some money. Or if a song was played in a bar, the bar has to pay the performing rights societies. But the performers, meaning guys like me, who wasn't the writer of Dancing in the Moonlight, we didn't make anything from those things. Now suddenly, what happened with streaming, and this is, and we're getting into the area why I think that Connor and his co-founder are geniuses, because they saw this coming. And the truth is that streaming changed everything, because first of all, it gave a huge revenue source to artists. It allowed people who were performers to make money, whereas before they only made money by touring. Really, they didn't make any money if they weren't the writers of songs, or very little money. And the other thing is that in the old days, a record would come out, it would run its course, and that was it. It was over. When Dancing in the Moonlight came out in 72, 73, first of all, we didn't make any money because the record company went out of business. We always called ourselves well-educated idiots. I mean, we went to Cornell. We weren't fools, but well, maybe we were fools. We signed a contract with a company that had no financing, so we got what we deserved probably. But what I'm saying was that records came out. They ran their life. They had their natural life, and that was it. There was no other use. There was no. Then suddenly in I think maybe in the 70s or. No, I'm sorry. In the 80s or 90s, CDs came. CDs came about, and so there was a second life, right? So a lot of people, all of those early, not all, but many early records were reissued on CDs, and that gave the artists another life. But that was it. Now, with streaming, what's happened is there's an indefinite life. There's a perpetual life for songs that people like. And people can hear their own songs. They can make their own programming. Right. They can do whatever they want. And so what's happened is that whereas an artist might have made some money from the release of a record, and then they made another little bit of money from CDs. But now they get paid for ongoingly for performance, whether it's on Spotify or it's on YouTube or it's on Pandora or many other channels that are out there. And what's interesting, and I think this is why you brought me on. The interesting thing is that if an investor wants to be able to invest in music and wants to have a little bit of protection, not just it's not like going into an oil well. It's either a hit or a miss. No, now an investor can go to a company like Music Royalties and see which songs Music Royalties owns and make an advised judgment, an intelligent judgment. Oh, these guys have picked good songs. They continue to be songs that people want to listen to. They'll keep streaming them. And by the way, right now, I think, again, Connor will tell us maybe 10% or 5% of the world streams music, but eventually 50% of the music will stream music. And so the growth is built in. And it's been great for artists and it's great for investors. I think it's a wonderful time for the music business.
Let's jump to Connor now. Connor, so thank you for that, Ron. We know a little bit about the history from what Ron said. I want to ask you just very simply, as an investor now, if I want to make money from music, not just consume music, if I want to be an investor in music, what are the vehicles for that? How do I do that right now?
Yeah, so there is it's now, like, in terms of, well, actually I should probably start with the history. Music, from what Ron was saying, it hasn't really ever hit the Wall Street Journal or Financial Times. And the only two instances where it has is that most people might know is when David Bowie securitized his royalties in 1997, which was famously called the Bowie Bond. And in 2016, when Michael Jackson sold the other 50% ownership in the Beatles songs for $750 million or something like that. So really, like, music has always been a technology story, constantly being updated with the next technology, vinyls or Francophone, vinyl, CDs, 8-tracks, whatever, all the way up until streaming. And it's totally, it's now, I would say, a legitimate investment product because it's now become this so-called utility. In terms of paying $10, $5 to $10 per month for all the music that has ever been created on your cell phone, it's very hard to give that up. So that's where it's now become, you've seen a lot of companies and people start to acquire royalties. So in terms of the different structures, there's, the fund structure, which seems to be extremely popular these days. But the problem with the fund structures is that whatever they buy after a 5 to 10 year period, they either have to sell or replace their shareholders. So with music, the long-term nature of music, where the royalties literally last for life of the author plus 70 years, and that's life of the last author. So that's if you create a song, you usually have people that do the lyrics, the producers who do, or musicians who write the notes. So it's the last person of that group that dies plus 70 years. So it's really a long-term asset, kind of like and protected asset, kind of like real estate.
Let's draw a parallel to something that our viewers might be familiar with, which is mining royalty companies. So Connor, your father, Tim Gallagher, actually was a former CEO of Metalla Royalty, a company that he was involved with for a long time. And Metalla is a company that our viewers are familiar with because we've had on E.B. Tucker many times. Metalla works by funding, where royalty companies in the mining sector, generally speaking, they work by funding junior mining projects and then receiving their cash flow. And so investors can basically invest in the cash flow of all these different projects. That's generally the gist of the business model here. How can that be applied to music royalties? As the name suggests, your company collects royalties for investors. So can you explain just very in layman terms how the mechanics work here?
Yeah, so in 2017, there was actually an article that kind of got the topic of conversation going between Tim and I about music royalties. It was actually in the Globe and Mail. It said that BMI pays out a record $1.2 billion to 700,000 artists. So that kind of got us, sniffing, because we'd already, Tim was already looking at long-term cash flows, with Metalla, and saw that, the second you create a portfolio of long-term cash flows and take it public and just keep acquiring, there is a really good arbitrage between what you buy them for and what the public market will hold them at. So basically, the difference for us was with mining royalties, they last anywhere between 5 to 10 years, and then the asset is completely depleted. Same with oil and gas, all resource royalties. But with music, it's in some cases it's perpetual. It's forever. Even once a song has become public domain, if they're still listening, people are still listening to that version, the original version, then there's still royalties that are collected on that song. So it's just an unlimited life in some cases, with generational protection on the cash flow. So it just seemed like a better thing that also everybody knew.
What's the dividend yield that I can expect as an investor?
So we're acquiring royalties for an average of 10% yields. And then when we go public, we'll hope that we'll trade it around, repricing at the very least of 5%. But the thing is, because we're growing, we're trying to add more royalties, more assets. We are trying to increase the dividend. So since we've started, we've increased the dividend 3 times. And in 2020, we increased it 80%. So that's where I think, if we're paying a monthly dividend, which we currently are, and we're increasing it, then no one should sell.
Right. But fundamentally, how is it different from investing in Spotify? Spotify, for example, is a publicly traded company. I am being exposed to basically all music genres they offer there. So what's the difference for an investor between buying, let's say, music royalty shares and Spotify shares?
Yeah, so owning Spotify, I would say, it's the platform on which you can listen to music, but Spotify themselves, I think they started to get into owning music because they've seen how lucrative it is and the protection. But with Spotify, they have their value add and keeping their customers there is making sure their platform is very user friendly. So, in terms of the protection and the exposure, you're getting exposure to the platform, but not the actual music revenues. And Spotify isn't owning those songs.
We're going to come back to ownership structure with you, Connor. But Ron, I'm just curious to get your thoughts on this. If I were to go back in time to when you first were involved with Dancing in the Moonlight, and I told you, look, in not so long from now, people, instead of buying albums, they're going to be listening to music, basically millions of songs on the palm of their hand, and they basically subscribe to it like you get their milk delivered every month. You see, it's a subscription service. What would you say to this business model? What would you have said back then?
It was completely. Nobody could. Well, I guess some people could envision it because they created it. But I'll tell you, I had dinner with a very famous multi-billionaire in New York City about 12 years ago, when I said that I believe that the future of all entertainment was people wanted to have what they wanted when they wanted it on their platform, on their own platform, and meaning on, they want it in their car, they want it in their bedroom, they want it. And this guy said, Ron, you're just talking voodoo economics. It's never going to happen. So it's not. It took real visionaries, and it took the development of technology. There's no way to. We didn't even think that. When cassettes came out, we thought it was the next coming of the savior. You know what I mean?
Yeah.
8 tracks. No. This is something that nobody could have envisioned. It's fantastic for musicians.
So, let's say back then in the 70s, if you were to release an album, let's say the album made $1,000. How much of that $1,000 went to the actual artists?
Well, the question is made. The question is, what does it mean it made money? The sales weren't. It wasn't based on sales. It was because the record companies were really good at deducting costs. So, if somebody had a 3% royalty, if the retail sales were $1,000, that means the record company probably sold for $600, something like that. I can't remember what the markups were, but it was about 40%. Right. And then out of the $600, let's see, you had the recording costs, you had the advertising costs, you had the promotional dinners, you had the blah blah blah, and the artist made zero, right? Generally, but if there were no costs and the artist had a 3% royalty in the early '60s, which is about what they were, and the record company made $600, the artist would make $18. I mean, it was pathetic, but there were, when you go back and read about artists suing record companies and doing audits, the reason they did the audits was because the record companies all cheated and lied and stole. I mean, that was the business model. The business model was lie, cheat, and steal the artist. If you're a good company, that's not possible anymore because in digital age, everything can be tracked down. Every listen, every stream, every sale, everything can be tracked. So it's wildly changed. But in the old days, it was just the records were. I mean, if the records that sold millions and millions of copies, obviously people made money, especially the writers made money. But yeah. But basically, it enabled those kind of successes, or even minor successes, enabled artists to build a fan base. And artists would tour. And that's what they did. They made money by touring.
I've actually read criticism recently from critics of the streaming model that for platforms like Spotify, for example, a very, very small percentage of the actual streaming revenues go to the artists themselves. And of course, what you're describing back then in the 70s and 80s didn't sound much better. So if you were to compare the different business models across time, what would you say would be better or worse for the artists?
No, it's better for the artists now, no question. But having said that, I mean, I follow these. People go to Congress, and people go to in the U.S., people go to Congress and petition to make Spotify and the other services pay more. They pay pitiful amounts to artists, and it has to eventually change. They've gotten away with it, and they've gotten away with it, but they won't get away with it forever. I mean, and what's interesting is that the fans love to use the service, no question, but the fans love the artists too, and the fans are the instrument of change eventually. I think I'm not a radical anymore, so I'm not going to go out and protest and say we're not making enough on our streaming, but it is really unfair, the amounts, and of course for a company like Music Royalties, if Spotify pays more, Music Royalties makes more. I mean, that's. I think I'm a shareholder, and I believe that company has a big future because I think that the amounts paid by the streaming services will increase. There'll be more competition among the streaming services, and I think the future is good.
Connor, can you follow up on that? Because you were telling me offline. That when money goes to a record, for example, or song, that money doesn't all go to the artist. There's a lot of people behind the scenes that own parts of the rights to that song, right? Can you elaborate?
Yeah, so just to add on to Ron there, a few years ago, there was actually the Music Modernization Act, which was signed in the U.S. that is essentially rent control and states that Spotify and all these streaming platforms, they have to pay more, and they're increasing the amount at which an artist gets paid per stream by 5 times over the next half decade since that agreement was signed. But in terms of creating a song, everybody, the historical model has always been, singer-songwriter. So, when people talk about, the Beatles being an amazing band and musical geniuses, it's because the old model was you were prolific in creating all aspects of the music as an artist, and same with David Bowie and so where the new version is the decentralized digital economy, where you now have upwards of 20 different co-writers and producers all collaborating. It's the collaboration model, the features model that it's become. So I could actually, I'll share the screen and I'll show. Sure. Because Spotify has done this incredible thing where they actually now show the breakdown of the shareholders to the song.
While you're doing that, I will share a personal anecdote while we're talking about Spotify. I uploaded one of my cover songs on Spotify 2 years ago. Over the course of a year and a half, it made 26 cents. But then again, it wasn't streamed very much. I didn't have Ron Altbach. I didn't have Ron in the band. That was the problem, you see. But anyway, I understand what you're talking about, Connor. Please continue.
Yeah. So this is some of the songs, the top songs that we have a financial interest in the music royalties portfolio. And just to show you kind of a breakdown of an old song, like I Can't Get No Satisfaction by the Rolling Stones, this is the share structure of who owns it. So not that many people, Keith Richards and Mick Jagger, also writers and performers, where when we go to the modern version, for example, In My Feelings by Drake, there's 14 different writers, co-writers, and 3 producers, and of which we have our interest, financial interest in the song from this guy named Black and Mild, also known as Adam Pigott.
When I buy into music royalties, which artists am I investing in? What are the deals that you've made? Can you share just a few names that you like to disclose?
Yeah, so I guess using that the example, I should probably also explain how royalties come in. So there's this global collection society or global collection that happens, and it's done by this performing rights organizations that go around and collect on behalf of the artists in their country. So there is like 120 different performing rights organizations. In Canada, it's called SOCAN. The US is a bigger market. So they actually have a bunch like BMI, Broadcast Music Inc., ASCAP, and CSAC. So once, in terms of buying a royalty from an artist, it's just as simple as reassignment, like I'm buying your condo, assigning the ownership to me, and then you just connect your bank account and start collecting. Right. So in the case of buying Adam Pigott's interest in My Feelings, we actually didn't meet him directly. We actually bought his royalties through an online auction house, kind of like eBay for royalties, called Royalty Exchange. And because they have some pretty good auctions here and there, of even some opportunistic stuff. So they have this portal. The money literally comes in. You can see that we've got 164 payments that have come in, and Adam Pigott right here, his money comes in, and then all PROs send an electronic statement from that quarter, which shows all the royalties from where they've come from, all the different pennies. So, for example, in this case for the Drake song, you see radio, TV, film, streaming, and then it even gives you the breakdown of what streaming platform: Deezer, Napster, Pandora, etc.
Before we pass back up to Ron, just give us an idea of what the kind of returns one could expect to make investing in this industry. So suppose I know the company isn't public yet. You told me offline you have plans of going public at some point in the future, but just in terms of the royalties, the dividends, what kind of returns are we talking about?
Well, from individual music rights or from Music Royalties Inc.?
From an investor standpoint.
Okay, so the thing about investing in one particular artist is it's hard, especially if they have some nefarious activities going on behind the scenes that might get out. that you wouldn't want to put all your eggs in one basket. So
Sure.
what we're trying to solve is the diversified portfolio of the top 10,000 songs of every decade, essentially the Billboard top 100 of every decade.
Cool.
And the average sale price has definitely gone up for these royalties. I think they're now, because of the private equity firms that have entered the space, they've definitely gone up to around 15 to 20 times cash flow for the big control block, of which essentially means if you have the control of a song, then you can get it into Super Bowl ads or movies or TV shows. But we're not focused on the control block. That's the expensive premium piece that you have to pay up for. We're more focused on the passive co-writer interest, the ones that are along for the ride. And there's literally 4 million of them collecting like $15 billion a year in cash flow. And we're just trying to offer them a market and diversification. Every artist that we've done a deal with so far, we want them to take shares. We do not want them to give up their income stream, but we want them to stay diversified. So our average is 10 times cash flow for a 10% yield from all the deals we've done so far. So really, we're just trying to buy at that price and have an accretive business model where we're making accretive acquisitions, which allows us to increase the dividend. So the dividend at this current pricing is 4.5% dividend yield. But the idea is when the new money comes in, we deploy it, we start collecting on the royalties, and we increase the dividend.
Okay, so are Ron songs in your portfolio, Connor?
Yes.
Okay, good.
Yeah, a bunch of them. A bunch of the songs.
I'd be disappointed if they weren't. Ron, we have a few minutes left. I just want to get, let's not talk business for the last segment of the conversation. I want to know what it's like to party with the Beach Boys.
Well, I'll tell you what, like I said, when I joined the band, they disliked each other so much that we had two jets. One jet for Carl and Dennis Wilson. Unfortunately, neither are alive anymore. And a couple of the other guys, and then there was another jet for Mike Love, Al Jardine, and their faction, which included me. And I mean, it was incredible to suddenly go from touring in a station wagon with 6 guys at King Harvest and be in a private jet where somebody says, "Oh no, don't carry your suitcase. I'll carry your suitcase." I mean, it was quite an experience for those 5 years that I did it. And then you get up on stage. And there's 60,000 to 100,000 kids screaming the words of every song, even though they weren't my songs. Although in the end we ended up playing a couple of my songs, one of which Connor's company now owns the rights to. It was called Country Pie. I was a co-writer, and we did it with King Harvest, and it turned out to be a real favorite in Beach Boy concerts in the 1977-78 period. But yeah, it's a thrill. I mean, it's a huge thrill. What am I kidding myself? It's you get to start to think you're important. You're up there on stage.
Did musicians have this kind of this mantra of personal finance that they adhere to, or did they just spend cash as quickly as they go? What are some of the things they spend money on?
I think that's changed a lot in the last 50 years since I started. In those days, in the early days, money came in. If you made $100 one night, you figure, well, I'm going to make that every night. I might as well spend $365 right now, right? Right. So everybody just spent too much, and people went bankrupt, and and then there were the extra spending on unfortunately drugs and whatever, and people got carried away and couldn't stop. But I was very conservative. I went out after my first year with Beach Boys and built a 60-foot sailboat. That was pretty conservative. I'm just with a piano in it and a jacuzzi. Yeah.
It was majestic, no less. No doubt. I can only imagine. Ron, final question for you: If you were to redo your career all over again, let's say using today's technology. Let's say with Connor's platform, let's say with Spotify and the internet, would you have produced your records any differently?
Well, I think that I'm sure that there would have been changes in the in the way that they were produced, but I think that the main thing was that the artists were completely hostage to record companies in those days. The record companies had the money. The record companies said they would spend the money, they would do the recording. So now any young man or woman, or boy or girl, can buy equipment for very little money and make a wonderful sounding recording, and then they can go out and get people to listen to it. They get their friends to listen to it. Those friends get other friends to listen to it. So people can build a following. And the truth is, I get asked a lot by young people who say, I want to become a musician. What should I do? And I always say, do you want to be a musician or do you want to be a rock star? Because if you want to be a rock star, I would say go become a plumber. You'll make a lot more money and a lot less frustrating time. But if you want to be a musician, you can't live without making music, then go make music and build your following. In the 70s, I don't know if you have 2 more minutes. In the 70s, there was a wonderful success in the 60s, early 60s and 70s, Chicago, right? And Jim Guercio, who was the producer, a very close friend of mine still today, that band toured every day for years, and they built their following. That's how they became famous. They didn't become famous because suddenly they look good in a video. They became famous because they entertained people. They entertained their fans, right? And they built a fan base. And it's possible to build a fan base now on digitally. It's fantastic for young artists, actually. Yeah. And a young artist can make a nice living.
Live streaming is a thing now?
Yeah, from a dedicated fan base, I think. And it's a fantastic time actually for artists, I think.
Okay, all right.
Always a 10-year. So always a 10-year overnight success story.
Yeah, exactly. Yeah. I mean,
Connor,
David, if you, I don't know if you guys covered while I was off. When I sold my rights to my 1/8 interest in the Dancing in the Moonlight master that we did. There's other Dancing in the Moonlights out there by Top Loader and others. But since that time, the amount of money that comes into the revenue that comes into music royalties has almost doubled. That's in 2 years. That's how growth of streaming has affected the ability of artists to make money, or companies that own rights. It's really remarkable.
Okay. Well, look, Connor and Ron, it's been an eye-opening experience talking to both of you about the music industry, something that I love personally on a very deep level. So thank you very much for joining us and educating our audience. I look forward to meeting both of you in real life. Ron, Connor, I know you're both in different places, but I love to meet you both and have a chat and talk more about music. Thank you very much.
Thank you.
Take it easy. Thank you very much.
And thank you for watching Kitco News. I'm David Lin.